Gentlemen, welcome back. Well, right now we are on the panel discussion, which is a leadership panel, the new CFO mandate, fresh perspective on prioritization and transformation. Well, for our panelists, we've got Mr. Raghupati Mishra, Group Chief Financial Officer, Liberty House Group. Well, a dynamic and a seasoned management professional with over 2 decades of experience and exposure in various aspects of business. A people's leader, he always inspires the team to grow as a competent professional and give their best to the organization. Well, we also have Mr. Nitin Khanna, Chief Financial Officer, Inorbit Malls India Private Limited. Well, as a leader of the financial and commercial operations, Nitin is accountable for the strategic financial planning, controls, financial risk management, supply chain, legal, and statutory compliance of the organization in his current roles at Inorbit Malls. We also have Mr. Kedar Patki, the Chief Financial Officer, India First Life Insurance Company Limited. Kedar, with his extensive career spanning over 2 decades, comes with a demonstrated history of working in the insurance industry. At India First Life, Kedar is responsible for managing end-to-end finance, planning and budgeting, taxation, and investment operations of the organization. We're also joined by Mr. Tanmay Kumar, Chief Financial Officer, Spencer's Retail and Nature's Basket Limited. Tanmay has a career spanning over 20 years working for market-leading companies, including PepsiCo India, Burger King, KFC, and Pizza Hut. While he set up the greenfield plants for PepsiCo, set up Burger King India from inception and scaled it profitable 200 outlet levels, acquired franchisees for Yum, and most recently turned around Nature Basket after acquiring it from Godrej. And this entire panel discussion, ladies and gentlemen, is going to be moderated by Mr. Niraj Shah, Chief Financial Officer, HDFC Life Insurance Company Limited. Niraj has been associated with HDFC Life since February 2019 and heads finance, audit, risk management, and investor relations. Well, Niraj has 20 years plus of experience in financial services, primarily in life insurance and corporate financial advisory. Prior to joining HDFC Life, he was associated with PNB MetLife, ICICI Prudential Life, EY, and BNP Paribas. So thank you so much to all our panelists for joining us. It is incredible to have you all with us today. Over to our panel and presenting to you our incredible panel on your stage and screen. Thank you so much once again for joining us. Thank you, Mr. Khanna. I can see you, and Mr. Kumar, thank you for joining us.
Hi everyone.
Thanks for introduction.
Pleasure, pleasure. I just request all our panelists to unmute themselves, and if you can put your video button on, thank you. Thank you, Mr. Patki. Thank you for joining us.
Bhavna, hi, Niraj Shah. Am I audible?
Yes, you're audible. I may request you to just put your video button on, Mr. Shah.
I'm unable to do that. It's been disabled.
Oh, I'm afraid we'd love to see your wonderful face early in the morning. Yeah, that's what we're talking about in the virtual screen. We need to see all the faces. But Mr. Shah, I'm sure the team. There you are. Perfect. Thank you so much and welcome. Lovely to have you on the panel. Thank you so much, sir. Yes, I can see Mr. Mishra as well. Thank you, sir, so much for joining us. As you can see, ladies and gentlemen, the panelists are getting prepped up and they are joining us on your stage and screen. And what a great day it is to start off with this summit. So I'd leave the panel in the able hands and let's begin, Mr. Shah, with you taking it ahead with your panel. Thank you once again.
Thank you, Bhavna. Thanks, Kamikaze Group, for organizing this. Good morning to all the viewers and my esteemed panelists. Happy to kick this off here. So given the topic that we just spoke about and after Dr. Mishra's address, I think it's very apt to actually delve into what we've done so far and what the future is going to look like in the context of our current environment. So keeping that in mind, we'll just think through how we want to really take this for the next 50 odd minutes. The way we organize it is that we have 5 panelists, and we're going to be having 2 rounds of discussion. We're going to basically starting off with the transformation that each of us have actually been a part of and driven in our respective organizations, and then follow it up with how we think the future is likely to pan out for our industry. So in this context, as companies continue to be sensitive about the health impact and the loss of lives due to the pandemic, and focus on the safety of our employees, customers, and ecosystem partners, opening up the economy has led to pickup of activities on the ground. This also resulted in marginal shift in income and spends at a household level. Alongside this, the overall context is also evolving rapidly in terms of technology, the economic environment, as well as customer preferences. So keeping all this in mind, the CFO's mandate could be thought of in the following manner, right? We could look at it as a change agent, someone who is expected to spot the opportunities as well as the risks that are presented by these shifts. We also need to be looking at adopting digital in a big way to be able to service existing customers as well as enable new business. Recognize that this is not a cost, but an investment for the future, and it's not an option anymore. And last but not the least, balancing the long-term with the short-term objectives continues to remain a key priority. We have to look at building a business which is sustainable. At the same time, ensure that on a quarterly basis, the street's expectations are met. So we kick off our first segment on that note, and I'd like to invite Kedar to talk us through how he has basically led the transformation journey in his company. Kedar, you're on mute.
Yeah, thank you. Thanks, Niraj, and thanks for having me. Yeah, I think the role of CFO, we've seen getting into CFO's role, preparing into it, and last few years we've seen. I think, especially if I look at the span from 2008 onwards, where Dr. Mishra also touched upon the global financial crisis, which led to a global economy going through a phase, and we've seen transformation. We've seen some risk management practices coming up, which kind of, we kept feeling that, yes, now we are very well prepared for any kind of risk. And, the risk also has a way of surprising all of us, right? So, yeah, I think, talking about the latest transformation, I come from an insurance industry, and, fortunately, it's 20 years young in India, the private sector of insurance. And we have kind of been, we've kind of seen a lot of transformation from opening up. But having said that, being financial services sector, we've also seen a lot of, I'm saying, digitization, automation as such in the industry. Having said that, does that become enough at any point of time? No, because it's continuously evolving, right? I'm saying we've seen disruptive kind of ideas, the technology keep coming, and we've seen the transformation. And as CFOs, we need to lead it. That's because we are expected to look into the future, have a view on how it is going to shape up, and kind of actualize it. So typically, you also mentioned some time back about ultimately managing street expectations. That's for listed entities, and managing shareholder expectations for the rest of the entities. So I think putting all that together itself is a big challenge. Has the CFO role really evolved? I would say yes and no, because the expectation is that we need to know about, how do we really go into future, so that, we continue kind of taking the company in the right path. So in that way, it has remained kind of similar, but the fact that the future itself is kind of rolling out new surprises to us, it's continuously evolving. So I mean, if I talk about my recent experience with the transformation, I think all of us have really seen, the pandemic hitting us. Sometime we got some sense in January, February, March, it completely hit us. And we really had to go back and look at all the processes, all, on the sales side, on the services side. And we quickly had to take stock. Where are we on technology? Where are we on enabling our sales and other than Salesforce. So it was a very quick thing. I'm just sharing this experience that as late as January, we had talked about a 5-year plan for the company. And come February, end of February and March, we had to say, look, step back, let's relook at everything that we are talking about, leave aside 5 years, let's look at this first 1 year. And within that, a few months, what are we going to do? And obviously the proposals in terms of what various functions needed to do to make sure that we sustain, we continue service and continue to, grow. The proposals start flowing in, and that's where we start really having to keep aside our ideas of what future holds for us, look at the new normal. And I'm sure, while we talk of new normal, we are still all of us discovering new facets of new normal. So in that light, we had to kind of evaluate each and every kind of deviation from our plan that was coming in, to make sure that we are taking right decisions. We also would have possibly had to let go of some of our views on technology and spends, and at the same time balancing, making sure that we're spending on right stuff. It's been challenging stuff, but I think that's what we have seen in the last 8 months, 9 months that we have behind us. I would only say that this journey is fairly long, and we will keep understanding the facets of the new normal. And I think we have a very, very major role to play in advising CEO, taking your management committee along. So interesting times ahead, and interesting times that it has given us in the last few months.
You're on mute.
Thank you, Kedar, for sharing those wonderful insights. On that note, I'd like to invite Nitin to share his experiences in his company and the industry at large.
Thanks, Niraj, and thanks to Kamikaze for giving this opportunity to us to be on this panel. Good morning, everybody. I represent the bond industry, and I remember we were the first one to close and the last one to open. And for initial 3 months, and I was hearing Dr. Ravi also talking about long term and short term, and my friend was also talking about long term and short term. I remember short term for us was survival next day. It was that kind of situation. That again brings back to the basics of what a CFO is all about. And when I talk about the duties or the role of a CFO and how it has evolved during the period, I think the first part is the functional leadership and how agile you are in terms of the situation. So if the situation demands, how you can just wrap up your sleeves and get down, start looking at your cash flow, start looking at your assets, controls, operations, whatever we have read in our professional education in the first year of chartered accountancy. I still remember those internal controls, basics of internal controls, and how you manage the cash flows, daily cash flows. And the first part I feel which has evolved in my day-to-day work is basically strategical agility, adaptation to the current situation, and how fast you can take decisions at then and there own. The second part is a controller. So if I look back pre-COVID days, when we used to talk about controls, we used to talk about major processes. We used to talk about how the SOPs are drawn. What is my segregation of duties? What are my delegation of authorities? If I look at the controls as of now, I look at what are my risk management practices. I'm giving laptops. There are more than 100 laptops which are given to the employees, and they are working from home. How I can look at my cyber security. So the entire paradigm shift, how you look at controls have got shift. The third part is the risk management. When you talk about, and we really heard about VUCA world. We used to talk about stories on how one company has got dissolved in 6 months. How it lost its relevance in 4 or 5 months. And this is a time where, it was completely ambiguous. And talking about my business, um, we went back and we saw how we can connect with the consumers. So there were malls on wheels. We approached many of the societies where we can, put our stalls, and we started selling through, because the malls were closed. How can we approach consumer? The second part was, we started video calling. You won't believe, I have one stores, the wash stores, who is selling 60%, of its consumption, monthly consumption, through video calling. Just before the malls got open. We opened the restaurants for Swiggy deliveries and Zomato deliveries, and it was all across. More than 60% of the consumption started through online. This was a time where you need to challenge yourself, and when you talk about risk management, uh, malls are there for people to come, celebrate, and physically come and visit the stores. And this is a time we challenged ourselves, that whether we can tie up with Zomatos of the world, Swiggies of the world, to make sure that the deliveries which are happening, we have safety of our consumers in our mind. Uh, the fourth facet is managing the key stakeholders, and my friend Kedar was talking about how we can go back to the board. And this is a time where, as soon as it started, we went back to the auditors. How this needs to be accounted, how we will close our books for the entire year. We went back to the board stating what kind of risk we will have. Projections was, the short term became this month, and the long term became a quarter. So our projections was, every quarter it was getting changed. So how the entire paradigm shift from long term to short term. We went back to, so I personally went back to many of the CFOs, retail CFOs, just to understand what's happening in the business. How food is copying up, how electronics are copying up, how are they selling, how are they managing this stuff. And it's unfortunate we still have one part of the mall still not open, which is multiplexes, huge entertainment centers which are not open. We still feel for them, and then that's the time where we decided, and then while we were talking to the board, how we can share the pain with the retailers. So this is how over the period things have got changed. When you talk about long term, short term, the definitions of long term and short term had got changed. And last, but not the least, I think there are times where in the CFO role has got changed from an accountant to a business partner, where we used to say that we need to guide and advise our business team. I think this is the third facet now, where we need to be in sync with the business team, not a support or an advisor. I think we need to talk the same language. We need to be there, get into their shoes, empathize, and take action on it. So when I look at short term, long term, the definitions have got changed, and the most important thing is the strategic agility. I talk more upon, I'll hear from my fellow panelists. Over to you, Niraj.
Thanks a lot, Nitin, for those insights. I mean, we will come back to a lot of things that you touched upon in the second segment as well. So on that note, Raghupati, if you could share your insights on the industry that you lead, that'll be great. You're on mute right now. You'll have to unmute yourself, please.
Good morning, everybody, and thank you, Niraj. Thank you, B2B Kamikaze Media, for giving the opportunity to address all of you. And I'm extremely proud to be part of this esteemed panel that ably led by Manish, by Niraj, being coordinated by Niraj, and Harish is there also. So thank you. So I joined this. Let me give you a story how it happened and all. Very recent, March 2020 only. I joined this group, Liberty House Group. It's a global conglomerate, basically interest in steel production, one of the largest steel producer in the world. Metal trading, mineral trading, and all. So they wanted to start the India operations, and for that they choose me for the India CFO and all. So I joined the first week of March, and there was one company, stressed assets through insolvency and bankruptcy would be acquired. Let's say around 13th of March, one steel production unit in Odisha. And as we all know, 23rd March, there was a complete lockdown, shutdown, or whatever new acronyms and names has come for all this thing that is there. So what happened that till from that 23rd March till 30th June, you cannot start your factory. Nothing you can do. The traveling stopped. No interstate or intercity or any travel was there. No flight, no train. You can't take goods to anybody. If you want to have to travel, that has to be medical emergency kind of thing. Everything got into a standstill. And uh, this is how it was happening. So we started. The objective was to get from our company. The objective was to get one company first acquired. Then it was a mothballed plant of around 2.5 years. It was mothballed, and now getting the startup repairs and maintenance, whatever capital expenditure etc. required, getting it, hire people to there, lead that, and start production. This was the objective that we had thought of around 6 months time we could do this. But when this standstill happened because of the pandemic, then everything was standstill, and then we thought and all. Now if you see, if you start from till 30th June, we were kind of the skeleton service and all, we ran there. And then from July they gave us uh, permission to have 10% people and all. So what happens is that in India, there are a plethora of laws and every state has different laws and all. So if you want to start one new factory or old factory that after some years you start, all licenses are expired and all, you require around 7 to 8 kind of licenses. So kind of factory license is there, boiler license is there. Then you have pollution control. There are 2, 3 kind of pollution. This thing are there. Then you have this electricity connection that you need to there. The electricity connection and particularly of this high density electric line and all that you require. There are 3 agencies. One is the producer of the electricity, one is the distributor, and one is the regulator, electricity department. You should have water to this. Then you have to hire people to operate for that. So I saw that this is how it is, and these things were not moving. So then I remember, I am being the global CFO, I need not be at the factory and doing all the things and all. So then I remembered one of my, when I was in Airtel, one of my past CEOs, he was saying that when you are working, there has to be a Bapu test. He said that if this business is your father's, what will you do? That's the Bapu test. So you do that and you will be successful in life, whatever you do. So I belong to Odisha and I know the local dialect and know there, and I went there, stationed myself there, got to meet all the relevant person, Mantri Jantri jitne hai, sabse mil liya, sare officer, and we got all the licenses in 1 month flat. Then when we tried to start this thing, then all political organizations through the, you see the union, because this was the workers and all unions. So there are 1800 people working before this plant got shut down. So they wanted everyone to be enrolled from day one. And even if the production is not there, and they were sitting outside with the dharna and all that, we all, if anybody one guy will enter, everybody has to enter. So it was from the management that everybody has to enter. And my colleagues there and all, they were discussing with the trade union leaders and all. I thought that let me take a chance, and as being a localite and all, I went there with a jeans and t-shirt one fine morning and sat with these people, the dharna people there, had tea with them and understood in their local dialect what they are trying to say. So they said that 2.5 years is there and we are not getting any wages and all. So I said that, so let the plant start and then only you will get wages. If you want to get the entire building at one go, it will not happen. You have to dig down the plinth, you have to get the walls, you have to get the brick by brick. So then they understood that. Then we had a second meeting next day, and they was quite puzzled because they were saying that these people meet only trade union leaders in hotels and they don't understand them and all. And this is one guy who is coming and saying that what do you require and tell me and let's start this. So they understood this, and we had a negotiation, and that happened. We said that every month 300 people we will take. So in 6 months time, we will take 300 people, each of them, and all other people will get a fraction of this thing, so that their wherewithal, their livelihoods are there. So all this amounts to kind of around 4-5 crores extra cost for me as a CFO. But every month, if I am not doing anything, I am losing 5 crores. And this is if that is strike goes on and all. So if that I can spend 4-5 crores, and then everybody is happy about it. So we entered into this agreement with the labor commissioner and with the local all unions and this thing. And from next day, 300 people enter, and everybody else comes, makes their signature and go. So, and in 3 months flat, we make this production 3 months, 15 days. On 15th of October, 17th of October, we started production of this plant. We have 1,573 people as of now, as we speak. We have the production running in. We have all the past employees who were quite good engineers and all who were migrated there. All are back. The middle management was the core to this. This plant was doing very well.
Right.
So this was the kind of thing that as a CFO, it might not fall under this thing, but this is what you need to do as a part of the senior management team. Whatever you can do to for the achieving the organization objective.
Sure.
So don't think you as a CFO only. You management, you have the responsibility of running the organization. Do whatever it
Absolutely.
is. And don't forget Bapu test.
No, fantastic. I think that was like a real classic. I think that's one takeaway for me for sure, the Bapu test. And the boundaryless behavior. It was a fantastic story, Raghupati. And we will come back to that. On that note, Tanmay, over to you, your experience at Spencer's and beyond.
Yes, sure. Thanks, Niraj. So I'll talk about evolving role of CFOs from the two perspectives. And people talked about the pandemic and how things are changing. So I'll come to that. But before I come to that, even prior, CFO's role has been rapidly evolving and building upon everything that Nitin said and others have spoken about, is in driving the corporate strategy. And I'd say that from three different, reasons. We land up holding the profitability projects anyways. In most of the organizations, CFOs land up holding that baby. When I dial back to my earlier experiences, and I was just a finance, manager, in PepsiCo, I was working on a project where we created a business case of expansion strategy for PepsiCo. So we were working on where will all the manufacturing facilities come, at what time frame, what would be owned, what would be co-op. Now, when you're doing that, you land up looking at your demand. You see how the economy will move. You land up seeing your sourcing. You land up seeing your total cost. And that gives a unique and very, very holistic perspective. Similarly, when I was at Yum, we were working on the expansion strategy for the stores. So where will KFCs come up? Where will Pizza Huts come up? What size does it pay back? Where is the competition? Similarly, I'm just going through different roles. So at Burger King, we started the company from scratch. The Burger King, we were given, an Excel model, which was done by the consultants in India. And you told, okay, in 5 years' time, this is where you need to land. Now, we landed up rewriting the whole thing and still trying to achieve the 4 to 5 years objective. So which means that rollout should be different. Some of the formats that were envisaged can't even be opened. So no. So this basically, the point I'm making is that the perspective of this holistic perspective, looking at the investment strategy, profitability puts the CFOs in a very, very unique position. One. Number two, we land up playing a big complementary role at the back end side of things, along with the top line strategy. So we get deeply involved in supply chain issues, business cases that are being made, cost restructuring exercises. Across business, what kind of KPIs are getting measured, and are they really truly driving the business priorities? Unique and great exposure that helps them drive the strategy. Third point, as things have changed, CFOs land up in, being the major initiators of all the technology projects. Even if there is a CIO, even if there are other verticals, you land up, except for probably the customer facing tools, most of the projects tend to get initiated with the support of the CFO. And that gives them a very unique, so here at Spencer's, we are now driving big time bots for driving productivity. Now, that's not just happening in finance side of things. We're trying to look at supply chain, for instance, and see what kind of productivity can do. Now, what happens with this is that, again, CFOs have a great understanding of each and every process. So those are the three reasons why I think even otherwise, pre-pandemic, getting involved, holding all of the investment profitability projects, playing a complementary role at the back-end side of things, and thirdly, tech process side. I think CFOs are well positioned to drive corporate strategy, Niraj. But coming to the pandemic, I think this whole aspect of driving strategy has become even bigger, and CFOs have come to forefront. Right now in this situation, each decision is being made with the perspective of, what is it that is going to do to your bottom line, the cash, how do you manage your cash, and how does it pan out in the context of what we started out to do. Now, what I would watch out here is, and the point around the initially when you made, Niraj, was about how do we therefore as a mandate balance long-term strategy and short-term, and deliver profitability with this whole thing. I think what I've learned in just 6 months of pandemic is that many of the things that we were doing, as things are unlocking, you're going back up and looking up and saying, okay, this is exactly was my 3 years or a 5-year plan. Now, how do I really? So the firefighting mode is over, long over, in fact, and everybody is looking at long-term yet again. Now, why, I think we are very well positioned. I think, who better to understand, and like Raghupati said, right, Babu mentality, who better to understand the CFO in terms of, increasing the shareholder value. So that's the core and crux of the business, and CFOs understand the best, right? So taking today the knee-jerk decisions based on current economic situation may not be the best course of action, because it should be perceived as an indicator of a cyclical change. In the end, a lot of organizations at the moment are undergoing cost-cutting exercises. They have to be calibrated in the context of the long term. You shouldn't be cutting your arms, and therefore the challenge again, when I spoke of strategy and the current situation, the third evolving role, or what I would say mention, is that our job as communicators. When we talk of balancing long term and talk of balancing short term, for listed entities like ours, it's always a challenge, right? Quarter versus long term strategy, right? Now, the only way for the CFO to manage it, because CFO knows, we all know that in the end, all decisions have to be in the context of the shareholder value. The only reason and only way one can manage this whole task of driving long term is to be able to communicate across the investment community, across the stakeholders, the board, the committee, the CEO, your peers, the organization, and then to be able to share why what we are doing, what we're doing, how we're going to execute, and how we're going to get there. So when you take those tough decisions, your share price is not tanking because people know the context of it, And each time when you're not on the path, you go back and say, look, this is how I have deviated, but this is what my path is again to get to the end goal. So long-term and short-term balancing requires you to be a communicator as well. So those are things that I would want to touch upon, Niraj, building upon and complementing what the others have said.
No, fantastic, Tanmay. I think they're wonderful thoughts, and I think we've had a very engaging first round. So we've heard from Kedar. He spoke about the long term becoming the short term, and the other way around. The objectives kind of having to dovetail in light of that. We heard Nitin speak about mall on wheels. He spoke about video calling and the full transformation, consumption moving online so rapidly, which we would have never imagined, 9 months back. Raghu spoke about testing ourselves to how would we run it if it were our own business. Absolutely key to assessing the resources that we have and the efficacy with which we can use them. Getting the entire machinery crunched, which earlier could have taken probably a year to less than a month, and balancing the whole aspect with union negotiations, and key in terms of the opportunity cost of not investing or spending. That's something that we did touch upon earlier as well. If we start looking at things as a cost, we may end up missing an opportunity, which could be an absolute multiplier. So that was one very key aspect of our discussion as well. Tanmay spoke about us being in a unique position, which we are, and we continue to be a complementary role across the entire value chain, not just in terms of some of the things that we are more directly correlated to. Getting out of the firefighting mode, getting into long-term, without worrying, without losing sight of what we need to do in the next 6 months, 12 months, 18 months. So a great, very engaging discussion so far. So on that note, I think we'll move on to the second segment. And on that, if our panelists can actually focus on keeping a time check, we have about, I think about 10, 12 minutes. So I guess, each of us can probably get a quick 2 minutes in to share our thoughts around some of the aspects, like we spoke about the orientation, where the CFO's role being a strategic enabler with governance responsibility to the board. We can think about it from a first principles basis. When things change dramatically, whether you call it a black swan event or whether you call it something else, it's about how do we go back to the basics and build the business going forward, right? It's about having an orientation which is horizontal rather than functional. We discussed that as well. So these are some of the things that I would think about from a future lens perspective. These are some of the lessons learned, which I think we could very well take forward with us and create an outside-in approach so that we look at our business, and at the same time we have ensure that we optimize with our resources and play from our strengths. So on that note, we'll go in reverse. I'll invite Tanmay, and we probably just keep it short, about a minute and a half each, and see if there is any questions that we have from the viewers.
Sure, so the role, I think it's going to, and I speak in the context of my industry now. For retail, I think there is a huge amount of action in the hands of the finance team and CFO. The cost of retailing is going to drop significantly. The question is by how much? Why? Because there's so many things are getting rejigged. The rental costs are being reworked. Marketing is being redone. We're thinking more digital. We're thinking of completely different ways of doing things. We are, everything has been looked at zero-based. We are looking at variabilizing a lot of costs so the risk is shared, stuff like that. So action there on the cost front. There is a lot of other work on the contour of the P&L itself changing, because the consumer behavior is changing, the mix is changing, their discretionary spends are going down. It is believed that in the short term they'll be buying stuff that is cheaper. They go down a little bit in their behavior. So this is all going to change. The category strategy or selling strategy will be repivoted, and that needs to be thought through. In the context of retail, the omni-channel will be the order of the day. The question will be, whose model works best. So strategic collaborations we are seeing every day in retail happening, but retailers plus normal retail dial-up, or sharing logistics infra with peers, or tying up with the whole host of startups which can do complementary stuff. Those would be the order of the day again in retail. So that's the third thing on omni-channel. Fourth thing I would speak of is cybersecurity becoming big in the context, and thus getting involved, the insurance around it, getting involved with the IT and working on the cybersecurity aspects. And lastly, and that is pretty obvious, is and not not to be underemphasized the leveraging technology piece, because this is, everything of, your go-to market, consumer, backend, everywhere. I think, the fact that we are doing this on a Zoom call and is just kind of brings out that it is just reached everyone. I mean, then nothing more can overemphasize this. So those are 4 or 5 changes I would see in retail quickly,
Fantastic, Tanmay. Thanks for sharing. Raghu, your thoughts on gazing into the crystal ball.
Yeah, see, now the CFO's role is kind of as a co-pilot to the CEO. And you see, from the CEO's perspective, he has all the functional heads who are doing their job. But here, CFO, apart from doing his core functions of finance and all, he has to also be a partner to the CEO. He is the best suited to do that. He has the requisite expertise and the experience and the kind of vision to do that. So that's how CFO has to be placed in that way. He has to be put up. The second part of it is that you should have a very dynamic finance organization. In finance organization, how you have built up, because you are as good as your team, right? So you should have a very smart, dynamic, and informed finance team there who are quite versatile and agile in their outlook. This is what is the best. You see, finance is such a function. You are the controller and you are the enabler. Both the things has to go hand in hand. You just control more or enable less, or enable more and control less, it will be a disaster. It has to be delicately balanced. Like we say, you see, in Hindu mythology, what happens, the Vedas are the defining thing, which all our things that we do, puja, etc., whatever procedural things that we do, is defined by Vedas. So if you see finance is a function, if you think it in the we define, we nurture. So we have to define the rules, we have to nurture the business. This is what finance function is, and the CFO has to lead it from the front. Like now, my objective, the management has given me, in 3 years time, I have to get a, through brownfield acquisition, build a 5 million ton per annum capacity in India and get all of them to EBITDA positive. This is my objective. Now, where the finance function comes in this, tell me. This is as good as business, right? So to get this organization objective, whatever is required that the CFO has to do, that's how it should be driven kind of thing, right? And that's how you do. And I do not agree with this functional kind of which industry kind of you come from as a CFO, right? Like you probably Niraj or Tanmay or Nitin, you might be driving your wife's hatchback to go for vegetables and all the things, and you must be driving your hatchback, and in the weekend you must be driving your SUV. At least I do like this. So whatever industry I have come from, kind of telecom to IT to EPC to oil field and now in steel. So if CFO is a multilateral role, he is the central to all planning, everything, the organization objectives. At the risk of being modest, I'll say he's the soul of the organization, and by virtue of his moral caliber and the kind of, he's the go-to person in the organization. Whatever is there, whether the directors or the shareholders or fellow functional heads or the CEO or a little lesser in the hierarchy people also comes to you. That's how you have to define yourself, the go-to person, the person who is defined.
No, absolutely, Raghupati. I think it's a very, very all-encompassing role. No question about it, and very, very liberating as well. I think it's very encouraging to hear these thoughts. And Nitin, over to you.
Sorry, I was on mute. So I will touch upon Tanmay and whatever Raghu said. I'll just add on some of the bits, not to this, not to repeat what they have said. So that definitely been there. So I'll probably put my thoughts under 6 buckets. Number 1 is, and these are all learning from what the pandemic has given to us. Number 1 is try to come out from your day-to-day routine and look at the big picture. It's very important. Try to understand there's a huge automated commerce which is coming in. How your business can adopt that. There are major macro trends which are getting changed. There's a huge setback which is coming on China, how is it impacting your business? Understand that. Look at your market share from the business. From an mall industry perspective, when I look at market share, I'm looking at time share of an individual. Earlier, I was looking at how I can bring you all guys in my mall and start consuming it. I'm saying how I can take them out from Netflix. How I can take them out from Prime Video, and how they can come to my mall and consume it. And not only consume it, let's make it as an entertainment center. Second is look at the trends. Tanmay talked about new type of consumption coming in. Look at the sustainability. Look at your product or services, whether they are testing the sustainability angle or not. Look at 5G coming in. Look at robotics. How your business, how your processes are coming to robotics. We have one sponsor here, Automated Anywhere. We're looking at RPAs, for bank reconciliation. We're looking at RPAs for practically everything. Passing a GL entry. Looking at e-expenses. How I can automate my business and bring down that entire time to serve. Look at omni-channel. Of course, I'll not dwell upon too much on the omni-channel part. Look at wellness industry, how it's coming up, how your business can get connected to those kind of industries and you can leverage yourself. Earlier, we were looking at customer journey, how you can get into your life journey. Many of the mobiles, now everybody they're talking about, how I can enter into your life and, you serve for the entire life and not only for a certain purpose. The brand, how your brand is coming up. The brand is new religion. Consumers are looking at ethical brands. What are the stands you are taking up in various issues? Whether it's talk about various issues which are there in the consumer market as of now. The social or the ethical issues. Take bold decisions. I think as a CFOs, sometimes we are not, and we normally go to the CEOs and we are sometimes not taking bold calls. You have to stand up and take bold calls, hard calls, stick to your grounds. And the last but not the least, I think today the consumer is looking for a trade-off. You go to the shop, how easy it can be, for him to consume. If you're in services business, how easy, for you to, serve the customers. From a mobile company, I remember, we always have this hassle, which is, privacy versus my convenience. Today, we want both. So you have to understand consumer psyche and get into that level. So CFO, old role definitely, is there to stay. That becomes a hygiene. These are the new trends which are coming up. All my learning, I just thought I'll share a bit.
Thanks, Nitin. Kedar, would love to hear from you.
Yeah, thanks. In fact, hearing from all panelists, you just realize the kind of responsibility on your shoulders, right? I mean, it's true. I'll just possibly keep it to 3 bullet points. Number one, I think we have one job of possibly traditional job of balancing the needs of your shareholders, your customers, and your employees. I'm saying that the tightrope walking, the rope has just got higher and the risk got more. So, I think we need to be really empathetic. The customer's requirements with respect to risk and protection and savings have changed. We need to be empathetic and make sure that, our plans kind of factor that, and in the short run, maybe take a little bit of hit on what our objectives were. Number two, I will say that look at, technology to develop new lines of, revenue. And, I always say this, that if there are type 1 and type 2 errors, I would rather do an error. I mean, I'm more responsible for saying yes to a right project because it's going to give me a stream of revenue rather than say no to a wrong project because it will only be a cost for a while. So that's one. And three, I would just cover possibly the most important, possibly traditional role, but which has become bigger now for, I'll say, financial services sector is not lose your sight from the risk management and risk control and the governance perspective, because we are in long-term business. We have to manage policyholders' money over a very long time, and risk management is supreme. We tend to lose sight of it in the short run. So I can summarize that. That's all. Thank you.
Thank you, Kedar, and thank you all the panelists for absolutely wonderful views. We've seen. I mean, I personally learned a lot. I mean, in this 50 minutes, it's just flown by. So wealth of experience, wealth of perspectives from people across different industries and multiple years of work ex. I mean, a few takeaways from me before we kind of hand over back to Bhavna. Clearly, some of the things that we spoke about, partnerships, absolutely essential. Can't be working in silos. Being a co-pilot to the business, right? In terms of being the role being industry agnostic, it's not really married to any particular job that we are doing. Looking at the big picture, spotting consumption trends, and removing friction from the life of the customer. So these are some of the things that I mean I've learned, I've taken away from this panel, and it's been an absolute pleasure. Thank you all of you. Thank you, Bhavna, and thank you, Kamakazi Group, for hosting us.
Thank you so much. Thank you to all our panelists for joining us and kickstarting what we call is the first panel discussion of this incredible summit today. So thank you all for the valuable time and the experiential learning that you bring with all the accolades you have in life. Thank you once again.
Thank you.
Thank you.
Thank you all. Thank you.
Thank you. So ladies and gentlemen, with this, we're going to be prepping for the next discussion coming up. Just allow us 2 minutes and we'll see you on the other side with our next panel. Thank you.